Okay guys, let's get this session up and running. Just looking at the medium term view here first of all. So we're looking at September, and yesterday's market was very bullish, and it's really corrected a big chunk of the downward move we've had since since immediately following the FOMC statement last Wednesday, where we came off the high of the year up at 1075.75. We had 3 down days in a row. Now yesterday we retraced a good chunk of that. As you can see, the volumes were pretty low. We had a pretty major Jewish holiday, which meant a lot of the market participants weren't involved, and we also didn't have any data, any economic data of any note. So volumes were light, but what we did get was a pickup in mergers and acquisition stories, which, as you remember from a couple of weeks back, this provides good positive sort of sentiment in the marketplace, and this on light volume produced actually a pretty big up move. If you actually look at the cash markets, they had their best up day since August the 21st. For us here in the E-mini S&P, it was our second best day since August the 21st. So really good up day yesterday, up at around 1.7% gains, and really positive kind of turnaround from what had been a kind of building negative sentiment. Let me drop down to the 1 hour chart here, because I just want to show you a fib series I'm looking at. So I'm looking at Wednesday's high, which is the high of the year, up here on the top left at 1075.75, down to yesterday's low at 1035.75. And I've been looking at this Fibonacci retracement series yesterday as we began to retrace that 3-day sell-off. And as you can see, these levels worked fantastically well yesterday. And once we did get through the 50% level, which was at 1055.75, it acted perfectly as support just an hour before the close. And actually the high of the day and the high overnight really has been defined by this 61.8% Fibonacci level. So these levels have certainly been very useful in yesterday's session. Also, I just want to point out the 200 moving average here, which is my red dashed line. So this is a 200 moving average on the 1 hour chart, and it provided a good level of support. Actually, it did provide resistance initially, just after the cash open. Once we got through there, it provided some decent support at times, and it has done overnight as well. We've just broken back above it. But this fib series I've been looking at worked well yesterday, and I think you should keep that on your charts for today. It looks like we're currently sort of ranging in between 61.8 and the 50% retracement levels. Let's just zoom into the 15-minute chart here. So we can see yesterday's big up move. It really launched from the cash open at 2:30. We got above 1049, which we'd identified as our kind of key pivotal level for yesterday's session. We'd said that if we get above there, that would lead to further upside, and we got a really good accelerated move through that level, up over the 50% retracement level that I was just showing on the previous chart. And then once we got up to the sort of high of the day at 6:30, which was the 61.8% Fibonacci level, since then we've been very much sideways, and we have been sideways overnight and for the European morning session so far. So we're kind of defined within this range, 1061 down to 1055.75, the 2 Fibonacci retracement levels. And we're going to remain within here certainly for the next hour, I would say, or sorry, actually the next hour and a half. We've got 2 pretty big data releases today to give us some direction. And actually, just before I talk about the data releases, let me go back to the 1 hour chart. So I want to talk about the targets we got on the upside. If this data is any good today, if it's positive data, first of all we've got to break above what is actually now a triple top at 1061. If we get through there, then we'll definitely test 1064. So if we get positive news on the economic data side, we'll definitely be up and testing 1064, which was the high on Thursday's session last week. So that's an important level for today. If it's really good data, then the high of the year, it's not too far away to be in range. the data will have to be pretty special, but it's certainly in range. 1075.75 is our main upside target. We've got R1 pivot coming in between these at 1068. So that might be a more realistic target once we get through 1064 if the data's good. Now, of course, we've had some variable economic data of late, so if that continues to be variable, if we get some disappointing news, then we're going to be looking at these Fibonacci levels again, back down to sort of 1049 and potentially below there, and back into that range that we were playing out for a lot of Thursdays and most of Friday's session. So the two bits of data we've got today, guys. 2 p.m. we've got the Case-Shiller House Price Index, and this is of course following up from last week's housing data. And although at the time, the headline figures from last week suggested the housing data was bad news. I mean, it was worse than expected, but you've got to realise the July data was sensational. So the fact that we had a slight decline in existing home sales for August is hardly surprising. But actually that decline, the July data was the best rise in existing home sales for 24 months, and August figures were the second best for 24 months, so it's hardly bad news, I would suggest. Today we're looking at the Case-Shiller House Price Index. Looks at home prices in 20 of the major US cities. This gets broadcast on a year-on-year basis, so we're looking for minus 14% drop in the last 12 months, and what we've been seeing is an improving trend, a decreasing drop over the last few months. We're looking for that trend of improvement to continue. Minus 14 is what we're looking for. Then we've got 3 p.m. data. We've got consumer confidence. Okay, so another important data set, and we're going to be previewing that in detail just ahead of that news at 3 p.m. So two really important data releases. This week's going to be a big week because we've got plenty of data on each day now up until the end of the week. You've got to throw in there the fact that it's the end of quarter 3 tomorrow, and actually on current levels the markets are sitting on what would be their best quarterly gains since quarter 4 of 1998. So barring any large sell-offs in the final 2 days of the quarter, it's looking like a pretty positive, well, very positive quarter for the markets. But plenty of data. Quarter 3 ending on Wednesday, of course non-farm payrolls on Friday, so I think it's going to be a busy week and there's going to be plenty of action. So good luck today, guys. Hope you have a good day.